Hello everyone, and welcome to a special session or video of our Philippine stock market wrap-up series with the research team. I'm Kara from First Metro Sec, and today I am here with the research team. We have here Royce Aguilar, our associate, and Sir Mark Angeles, who's our head of research, who's also on the line. So we made this special video in continuation of the stock market wrap-up that we conducted just last Tuesday, March 31. So we actually received quite a lot of questions from our viewers, and unfortunately we didn't have the time to accommodate them all last time. So for today, for you, we have allotted time to skim through the most common questions that were sent in so that our research team can answer and revisit what happened in the market the past month to further guide you on how you can better refine your trading plans or strategies during this global crisis. First question that we have here is for Sir Mark. So as a potential investor, do I buy now or hold off till the community quarantine is lifted? If enhanced community quarantine is extended beyond April 14th, how do you see it affect the overall market sentiment?
For the first question is that if you buy after the community quarantine is lifted, I think the market will be moving up by then. So I suggest you continue to accumulate while we have it in place. In regards to being extended beyond April 14, I think that's already that is already reflected in the prices. So it should not be a surprise. I think mostly there are news that there's a strong probability that it could be extended if we don't flatten the curve in the next 2 weeks.
Second question that we have here, with rumors of the Philippines having a stimulus package to be rolled out soon, how fast and how much would it affect the index and your stock picks? Worst case scenario, do you think a recession may happen?
Okay, for the first part, that we need to see the curve flatten out before we see any meaningful upside in the market. The stimulus is there to at least mitigate the downside on the economy and also on earnings, but it will also serve as a boost for the market when it starts to recover. But before the markets can start to fully recover, we need the cases to go down. In terms of a recession, any forecast right now will not be as reliable as before. The ranges should be wide in terms of where GDP is going to be and in terms of earnings is going to be. There's a case for a recession given this is unprecedented in a way that economic output stopped or grinded to a halt.
Question, any insights, sir, about the news that just recently came out, which Russia agrees to talk to the US about oil price? Is there any good effects in the PSEI and what stocks?
So the US and Russia talked about the oil markets, I think, last night, and I think there was a good outcome that should benefit the US more if they can agree on a supply cut, especially with Saudi Arabia. That should stabilize oil prices moving forward, and it benefits the US more than any other country because the US is the biggest shale producer in the world, and they need a certain price for oil for shale producers to break even or be profitable. In terms of impact on the local market, the lower oil price should be good in terms of consumption. It helps the disposable income of Filipinos, but we rather see a stable oil price than a volatile oil price. That should help that should be more positive to the market. And in terms of what stocks will benefit I think I only see one, probably Petron. You can see some inventory gains if oil price starts to go up.
Okay, so moving on to Royce Aguilar, our research associate. We have a lot of questions actually here, most commonly about stock picks. First question, do you expect oil companies such as Shell, Petroleum, and Petron to benefit from the declining global oil prices?
Declining crude oil prices in the world market is intuitively positive for the businesses of oil refining companies, such as Petron and Shell, since this lowers down their general cost of goods sold. However, when we analyze the profitability of the company, we need to take into consideration also both the revenue and the cost side of the business. So in this case, revenue growth of oil companies depends both on the growth of the sales volume and the price of the refined petroleum products. So with this year alone, or at least this year, challenging year for oil companies, and we generally advise clients to be cautious since risks are still elevated at this point. So keep in mind, demand on petroleum product is dragged down by the risk of economic slowdown due to the pandemic. Moreover, the management of these oil companies guided that we are still yet to see the crack spread between the price of refined petroleum products and raw crude oil to improve. So, given muted economic activities, the spread are expected to continuously deteriorate, meaning um, moving forward, margins will still be challenged. Margins will still be leaning towards the downside. So there's still risk. So there.
Okay, thank you for that, Royce. Second question up, how about DMC? Is it good to buy for long term and its dividends?
Well, for DMC, we have to take into consideration that it's subsidiaries. So first, it has its mining, it has its construction, it also has mining, nickel mining, coal mining. It also has its power business. It also has Maynilad. So almost all those companies are affected significantly, especially the coal mining business, which bulk of DMC's earnings come from. Um, the problem is we were seeing lower coal prices, and also probably they're not producing as much as they would like, as much as forecasted. So it's still it will still be a challenging year for DMC, and compared to other index names, DMC will be one of the likely laggards. Of course, you'll see the business of Maynilad, but at the end of the day, bulk still comes from DMC. So you have to take that into consideration before fully investing in the stock. So there.
Okay, thank you. Thank you, Royce. Our next question that we have here, will regulatory constraints against online gaming be relaxed now that most transactions are encouraged to be done online?
Well, doing business transactions online is not a new thing in the market. Online systems have been present for a very long time, but it was highlighted recently by the COVID-19 outbreak, which forced the government to implement the ECQ, the Enhanced Community Quarantine, and some companies are also adopting work at home setup. However, hesitation from the government in terms of the approval of online gaming businesses like Pogos, which is not dependent on whether local businesses will now prefer conducting transactions by online. So, with the Pogos issues on tax evasion, we're seeing labor cases. The government is more concerned on securing the welfare of the community and ensuring that Pogos conduct businesses on a fair and legal way. So, of course, we're seeing the crackdown for Pogo companies which are not paying taxes. So, those things we have to take into consideration. That's why, in terms of which companies to invest on the property side, we like companies which are not that exposed to Pogos, given the uncertainty sentiment-wise and earnings guidance moving forward, given the government is still cracking down on Pogos.
Okay, thank you for that, Royce. Next question. If this COVID-19 will last for the next 6 months, what do you think will happen to our economy, especially to housing loans? Do you think many low to mid-level buyers will default?
Well, with the slowdown in market activity brought by the pandemic, the real estate sector will feel the effect across all its basic segments: residential, construction, commercial, office leasing. On the residential, to be specific, we believe that there's still a healthy demand and supply on the mid-market vertical projects. However, given that the demand in this segment is on this market is mainly employees, the ability to pay the housing mortgages will depend on one, the interest rate, and two, individuals' cash flow. So given that interest rates remain low, the default on housing loans will depend on the consumer's ability to earn cash flow from their employment. So we see risk on the loan default and future residential demand if the pandemic has already impacted the overall unemployment rate of the segment. So that dun siya nakadepende. So assessing the impact of the COVID-19 on employment, we see that the middle income segment is relatively less vulnerable compared to the others. We see that the impact of the lockdown and socio-economic activity is more on the low-income daily wage earners and informal workers, unfortunately. So, moreover, we believe that there are several reasons why employment rate in this segment remains solid. First, employees are protected by labor laws. That's one. Another one is BPOs, which employs majority of the middle class have business continuity plans that allows employees to work while lockdown. Actually, that sector is the one leading in terms of work at home prior to this lockdown. Another is BPOs are continuously expanding and employing local. With the slowdown in market activity brought by the COVID-19 pandemic, the real estate sector will feel the effect across all its business segments. So residential, construction, commercial, and office leasing. On the residential, we believe there's healthy demand and supply on the mid-market vertical projects. However, the demand on this segment is mainly employees. So the ability to pay housing mortgages will depend on number one, interest rate, and number two, individual's cash flow. So given that interest rates remain low, the default on housing loans will now depend on the consumer's ability to earn cash from their employment. So assessing the impact of the pandemic on employment, we see that the middle income segment is relatively less vulnerable compared to the others. So the impact is more leaning towards the low income daily wage earners, the informal workers. So, but bottom line, we believe that there are several reasons why employment rate in this segment remains solid. One, why? Employees are protected by labor laws. We can see that. Number two, BPO, which employs majority of the middle class, have business continuity plans and work from home setup. Actually, prior to this, BPOs are the ones really leading in terms of work at home setups. That's the second one. Third is BPOs are continually expanding and employing local labor. And lastly, Philippines remain to be the preferred market for international businesses due to cost efficiencies. It's not that costly to operate here in the Philippines. So there.
Thank you for that answer, Royce. Our next question here, what is your take on PSP and Sun?
Well, I think those two are the more speculative names we have as of the moment. Of course, I want to go first to SunTrust. Of course, for SunTrust, the new catalyst as of the moment is its resort casino partnered with this Hong Kong-based company. I think for those, I think it depends on you. What kind of investor are you? If you are technical analysis guy, you just follow your rules. You set your cut loss. You should have a more stricter cut loss given the market. But if you're looking towards fundamental, you would likely base it from the news here, because nothing as of the moment, something on housing, not much yet on the casino side. This is their first casino. That's why if you really want to know how sustainable investment is SunTrust, you really have to see the progress first of the resort casino. But of course, it's very noteworthy that before any news come out, usually you will see price already moving. That's why you really have to invest in these kind of things to at least have a bit of grasp of technical analysis to see if there's volume on the rally. Because if there's volume on the rally, there might be something going on, there might be news coming out. So that's Sun. For PXP, it's actually the same. But usually PXP is now pegged towards the US-China relationship. Actually, we have not seen progress from there recently, maybe because of the pandemic. Of course, each government is focusing on local matters. So for Santas, you watch the news. There is some progress on the fundamental side, but again, no, any catalyst from here on will only be based on the news because it's not that much earning yet. And even if earnings are good on the housing, on its business as of the moment, that's not a catalyst anymore. It's the catalyst is now on the resort casino. So there.
What is your take on Surtech Holdings?
Well, for Surtech Holdings, I would like to discuss both fundamental technicals. So, in terms of fundamentals, it's really challenging given that I believe it's operating at a skeletal operations, if I'm not mistaken. But based on what the news I saw last week, it's actually performing better compared to its other competitors. At least that's what they disclose. So that's good. Of course, tech has been one of the, if you include 2019, is one of the laggards. It has significantly rebounded this year. But again, when you take a look at fundamentals, besides the news that they're performing better than other companies like them, I think how is this sustainable? Once everyone operates, how will they continue to outperform? So that's on the fundamental side. So on the technical side, it's pretty noteworthy that it's forming a bit of a bottoming pattern. You can see, at least from my point of view, you can see an inverse head and shoulders. If you take a look probably in your own chart, on the daily chart, you will see tech forming this bottoming reversal pattern. So something for you to watch out for once the dust settles. Usually stocks like those perform well on once the index is volatile because investors are looking for other ways to earn from the market. So there, on the fundamental side, they're kind of doing okay now, but of course, moving forward, it may not be as sustainable. But on the technical side, there is opportunity for traders. You can see that when you look at the daily chart. So if you want clarification on your charts, you can just email us. So there.
Just a few more questions left here. What is your outlook on AC?
Well, for Ayala Corp, I think it's not one of our coverages, but we are positive on the index. I think AC alone has its own catalyst, and it is noteworthy that bulk of its earnings comes from the bank, BPI, its telecommunications business, Globe, its water business, Manila Water, and its new subsidiary, which is really performing well, which is its energy business. It also has other subsidiaries like IMI, automotive businesses. So okay, so now we've laid down the subsidiaries. As of now, its subsidiaries are struggling like any other conglomerates. To be specific, for Ayala Corp, IMI is struggling, mainly because some of its facilities in China, Mexico, and even here in the Philippines are not fully operating. So IMI also automotive, no demand for not that much demand for cars given the lockdown here in the Philippines. And moving forward, should the economy rebound, definitely, if you're a long-term guy, Ayala Corp is definitely something to hold along with our index buy picks. Mainly because moving forward, BPI will benefit. Globe is also already benefiting as of the moment. So if you're a long-term guy, I think these are the stocks that are somewhat a no-brainer to buy, given that they perform well once the economy is strong. Of course, previously, even before the COVID pandemic, the likes of IMI is struggling already. Um, Even the automotive business because of the higher excise tax. But again, no, those are not structural change. These are companies struggling and will likely be solved sooner rather than later. So, and again, the bulk of its earnings still come from banks, telecom, water business, and Ayala Land. I forgot to mention Ayala Land also. So really, since we're positive also on Ayala Land, we're also positive on the banks. You can see telecommunication sector benefiting already as we speak. So something to hold on for the long term, but expect volatility in the short term as investors digest the economic impact of this pandemic, not only here on the local front, but on the global front. So there.
Okay, thank you, Royce, for that answer. Our next question, or rather our last question for today is, you mentioned in your topics, what is your assessment on FMETF stocks, both short and long term?
Well, for FMETF, I think when you want to buy FMETF, you're buying the index, the 30 index names. And when you're a new investor now, you have so much upside moving forward. Of course, now we tell clients to take advantage of this dip, but we also tell clients that there may be volatility in the short term. Of course, to answer probably what's everyone is asking now. So this is today. Today is March 7. This is post market of March 7, and I would like to tell you, is the market the rally of the market now sustainable? In the short term, to be honest, we do expect a bit of a pullback from here as investors assess the economic impact of this pandemic. But if you're a long-term 1, 3, 5 years, 10 years looking ahead, you can accumulate from here on. You can start accumulating now. So to answer your question, short-term, again, short-term volatility, magulo pa. Short-term, you can see some pullbacks. You can see the market pull back 5,000, a bit below 5,000. But if you're looking 1, 3, 5, 10 years ahead, you can start accumulating now because the upside is there. Every time it pulls back, the risk to reward is increasingly skewed to the upside, meaning mas mataas yung reward kaysa sa risk. So there, no-brainer by FMETF because compared to mutual funds, it has less taxes overall. And there, so
Okay, thank you so much, Royce, and of course, Sir Mark, for sharing your insights on the most common questions of our investors and traders. I'm sure viewers of this video will be able to take away learnings, especially on the direction of the market and the outlook, of course, on our house or stock picks amidst this COVID-19 crisis. Our appreciation as well goes out to those of you who are watching this video. Thank you for spending your time with us. We hope you find this video beneficial for whatever purpose it may serve and have provided some sort of enlightenment as you navigate the market during difficult times like these. Before bidding you goodbye, however, we would like to invite you to follow us on our social media channels with the handle at FirstMetroSec. Don't also forget to hit subscribe and follow our official Facebook family. You can find all of those links down below. And that is a wrap for today's special Q&A. Thank you again to our research team and those of you watching from home for being part of our session today. We wish you luck and please don't forget to sanitize, stay home, and stay healthy. As always with First Metro Sec, it's hashtag your future first.